Right, thank you very much. Here again, we're here today with James Burt from Cardens. Um, Cardens are actually iHouse's accountants. But James, welcome to you. Thanks for joining us.
Not a problem. Thanks for asking me to come on.
No, you're more than welcome. And just cover a few things. To start off with a few COVID-related items. So some of our landlords have agreed, either voluntary or otherwise, to take less rent than they should do. Just a bit concerned. So if I'm a landlord and my rent's, just for sake of simplicity, £100, and I've agreed to take 80, will I pay tax on the 100 or will I pay tax on the 80?
Well, there's two things on that. It all depends on how you account for your rent, meaning that, for example, you've got a cash basis, which means you pay tax on the money you've received, and then you've got an accrual basis, which is where you pay tax on what you have invoiced, etc., which is the rent you've charged. You can be cash basis if your gross rents are under £150,000. So then you could do it based on what you've received. If you can't and you need to do it on the accrual basis, then you would have to do it on what you've charged. So if you've charged them £100 and you've only received 80, you'd still have to record £100, and then it would be down to you to recoup that £20 later on. That's all you can do, really. But from an accounting perspective, if your accruals, you put down what you've charged regardless of what you received. If you're cash, then you put down what you received. I hope that
Yep.
clarifies that a little bit.
Yep. And if I've been lucky enough to have got a grant, which is a bit rare and almost impossible to get for landlords, but if I have got a grant, how do I account for that? And if I've got a loan, which obviously I've got to pay back at some time in the future, maybe an interest-free loan, but again, how would I account for both of those?
Okay, so I'll tackle each one as we go. So the grants obviously aren't repayable, so that's not an accounting thing, but we know that they aren't repayable, but they are still taxable.
Oh, right.
So they are. So for example, if it was a company that received the grant income, then what we're saying is, for example, if it was a grant to do with wages, for example, then you would account for it by offsetting it against your wages cost figure for the year, or you could put it as an exceptional item as other income. If it was to do with rates, then you'd offset it against the rates figure that you declared, or again put it as other income. But it is taxable, which a lot of people aren't aware of or wasn't sure of. But if it goes into a company, it is liable to corporation tax, and I assume the same would be for goes on a self-assessment. It is going to be taxed as a form of income. For example, going slightly off piece, but the other type of grant is the job retention scheme for the self-employed. Say they do get £2,500 a month, that still needs to be declared on their self-assessment tax return as income and taxed as normal. It is taxable. So it's not as if they get the full £2,500 in that instance. They get that and then they pay tax on it as and when it becomes due. But from an accounting perspective, offset it against the cost that you're receiving it for. But just be aware that you will be liable to pay some form of tax on it.
Yes. Tax man gets everywhere, doesn't he? So
yeah, unfortunately they do. But at least they've offered something to try and help.
And what do you know about the loans and grants? I know it's not your area of expertise, but do you know much about it? Because we keep getting asked, what's the chance for a landlord getting a loan or a grant? And I've basically been saying minimal, but have a go.
I think that is the case. It is minimal because as all of your sort of landlords will probably understand that it's normally deemed as investment income and not necessarily a business income. And these loans are geared more towards businesses rather than investment portfolios as such. So what I would say is, it's highly unlikely, unless you can prove that you're a business, which falls down to the old criteria of you don't have a letting agent, you work more than 20 hours a week on, for recovering rents, arranging the maintenance, etc. Traveling to and from the properties more often, and you don't really have any other type of income other than this, then you might have a chance improving it's a business, but it's very, very slim. Obviously, there is the tool online with the government website that you can go and check your eligibility. So if you could go on there and have a look to see, but I believe that a very small percentage of landlords will be eligible for this, and the only reason they would be is if they can prove that they've got a business, and it's not just a normal investment income on the tax return, because that's the same as what they're doing with limited company directors, is they're discounting dividends in this, which is investment income, the same sort of basis that rent is.
Yeah, I did see a website the other day which you could check your eligibility. So what I will do is I will find it and I'll put it up along the bottom of the video when we put it out.
Yeah, of course. It's worth checking, but I do believe the chances are very small. I mean, the only other thing that they could do, the insurers, whether you can get them to pay out, is check their insurance to see if they qualify for any sort of business interruption due to this COVID scenario.
Yeah.
Depends what the fine print says or whether they've taken out certain type, but it's worth exploring their insurance policy just to see if they're qualified for loss of rent due to business interruption caused by the COVID. So I'd suggest that there's no harm in checking.
I know. Now, I know there was a lot of hoo-ha recently, which I discussed with our insurance brokers, where Hiscox, who are the main providers of this kind of insurance, were failing to provide, failing to pay out, and they were being investigated. So obviously insurers like to take money in, but they don't like to pay it out, do they? So that's another matter.
Yeah, it is indeed. But as I say, worth asking the question.
Yeah,
for sure.
Yeah, and then people realise that they will get to the end of their life eventually, and unfortunately, this has brought it all to bear. Do you deal much with inheritance tax planning, or is that the sort of thing that's outside your scope?
I have a little knowledge in it. I've studied it, of course, but we do have a corporate tax manager that deals with our inheritance tax planning side. He's fantastic, got a lot of experience in it. So, as a company, with most things we can handle it all. But myself, I have minimal knowledge of inheritance tax. I'd have to go and have a look at a lot of things. More than happy to be able to do it, and more than capable to do it. But we've got the resources in house to be able to tackle that as well.
Yeah. No, certainly at the end of this video, we'll put Cardens' contact details up. So hopefully you get people coming to you and talking to you, and then just hopefully to get away from COVID for a little while. But what sort of howling problems do you see typically landlords making when they come to you, say, here's my books? You go, no, you can't do that. You can't do it. What typically do you see that landlords really shouldn't do?
I think the difficulties that we face with, not just landlords, many clients, is just incomplete records. They haven't given us all the information, so they haven't given us all of the rental statements, or they haven't got support for things that they paid for in the year. So it's very difficult to sort of go fill in the gaps, because you don't want to be making any, guesstimates, because a lot of the time, the rent that they receive is net of charges, etc., etc. But you kind of need that broken down. So what we find is, just gaps in information, and people not keeping the records that they need to is quite a big one. Especially when you give them the tax bill and they nearly fall over, and then they realise that they've paid out, maybe 20 grand, for example, for loads of repairs and maintenance, various things, but they haven't got any form of documentation. Then that becomes a massive problem. So that is the main thing is missing records. But the other problem we face, it's not a problem, but it's just people's understanding of capital expenditure versus revenue expenditure. People thinking that, I've spent 50 grand on this, therefore it's going to come off my tax bill. But when you drill into it, you're like, actually it's a capital improvement, and therefore it will be added to the value of your property and be accounted for when you sell it in the capital gains, not off of your current tax bill. So if they've been calculating it and saving based on the basis that they're going to get a much lower tax bill, then you have, you know, a bit of an issue. And it also becomes an issue when they give you, you know, a statement from a builder, like a schedule of works, that's you know, very vague, and it's, you know, again, we use 50 grand, and you're needing to split it into, right, okay, what's a capital improvement and what's a like-for-like replacement or repair, and they can't provide it. That becomes difficult, because you really need to know, because, you know, if, you know, the revenue ever had a look, they would be asking the same questions. Okay, there's 50 grand here, I need to know what was capital, what was revenue expenditure. You know, so you need to, you know, if you're getting a lot of building works done, you know, to receive an invoice saying as per quote isn't exactly great for an accountant. If you have, you know, ideally you'd need like a schedule of works with the costs broken down for each bit in quite a bit of detail, so that, you know, one, you know what you're paying for, which always helps, and two, it will definitely help you from an accounting point of view, so that your accounting can split and allocate it correctly, so that you don't have any, you know, issues in the future.
Okay. And I mean, the thing we're always stressing to landlords is we unfortunately get landlords to say, well, I've used this accountant for years, he or she doesn't know much about property. And we do stress to people, you really must use an accountant or a bookkeeper or whatever who knows about property, otherwise it's going to end up costing you money.
I think so. I think, you know, many fantastic accountants out there, but if, you know, if you're in property, you need someone that has, you know, a specialism or in-depth knowledge of property, because there's so many complex areas to it, which I'm not going to go into, because, you know, there's just so much to talk about. But they really need to know the ins and outs, so that when you're going along, you can give the correct advice and inform the client of what they can't do, what is tax relievable now, what's tax relievable in the future, so that they can make the right decisions when they're doing something. So whether they're going to do this bit of work or this bit of work, they can speak to you about what the tax reliefs are going to be and when they're going to be before they go and do it. Because they could be going to spend tens of thousands of pounds on something that they think, well, I need to be doing this. Actually, I should just do it because I'm going to get tax relief. And that's not the case just yet. And therefore they go and spend it, and then it works. It seems that it transpires that it's not the case. Then they wish they'd waited, you know, quite a while, or they've calculated a much lower tax liability. I think they've got all the money saved, which, you know, is fantastic. But then they see that their tax was a lot higher. You know, it causes, you know, undue panic and stress trying to get that money together, which just isn't needed. So yes, you know, going back to it, getting an accountant or bookkeeper or both that's experienced in property in all aspects is definitely worthwhile. That's for sure. Because like you say, it could, you know, cause, you know, wrong decisions, or, you know, paying more tax than you need to, which, you know, no one likes doing.
No, well, the taxman likes, but we don't like.
Oh, they love it, but, you know, we don't like it as much as clients don't. So we try everything we can within all the rules to make sure, yeah, that's the case.
Yeah. All right, James, thank you very much. It's very kind of you. So, as I said, your contact details will follow at the end of this video. So thank you very much, and hopefully we can have a conversation in the future.
You're more than welcome, and thank you again.
Okay, you're welcome.